Hello everybody, this is Toni Turner and welcome to the market now as of Friday, May 15th at about 1:30 p.m. The S&P 500 zigzagged on both sides of unchanged today as investors weighed worries about China-U.S. trade relations and weaker than expected retail sales data against optimism over the reopening of the U.S. economy after coronavirus lockdowns. U.S. retail sales and manufacturing output showed record declines in April as the virus effects were felt in the second quarter. However, consumer confidence rose to 73.7 in April, higher than the consensus of 68. So there, we do have some good news. Okay, as we always do, we're going to look at a daily chart of the S&P 500 ETF, the SPY. As you all know, this is the ETF that closely follows our benchmark index. Now, when I captured this chart today, the SPY was trading at $285.09. Again, it's about 3:30 Eastern Time, so we're headed right toward the close. The SPY, as you all know, made its all-time closing high on February 19th at $338.34. Since then, as you all know, the SPY went down to about 218, about 2180 on the S&P 500 itself, rallied from there and then started going into kind of a consolidation zone here for the past 3 weeks. So it did come back up off of its March 23rd lows, and now it is about 23% above those March 23rd lows. But as I said, it's now 19% off its highs. So it's still in correction territory, but it is not yet, again, in bear market territory. So we've got that going for us. Now we do have the SPY took a mini dump here, a mini dumpster dive is what I wanted to say here on Wednesday, dropped down on Thursday almost to its 50-day moving average, the green moving average here you see, almost down to about 271, then gapped up today, has been fighting the red line, the 20-day moving average, ever since it opened this morning. It's been positive and negative on the day, and it is now struggling right here at 285. Now this 285 with the 20-day moving average, that's price and moving average together, could end up offering resistance here as we move into next week. This fall down here, this little mini dumpster dive, made a lot of people, myself included to a degree, decide to take risk off this week. Some of the higher risk trades for sure I took off because we knew that it would go one way or the other from this consolidation zone. Obviously, it's going to go one way or the other. And it was just a gut feeling it may go to the downside. We don't have a tremendous amount of good news out there. But anyway, the good news is it's fighting back. It's here at 285.09 or about 28.50 on the S&P 500. Certainly not trading on its lows. So next week we've got to see, can the SPY claw its way back into, get moved back up through this 285 resistance ceiling? Can it do that and move back up into this prior consolidation? Better yet, can it move up to the 200-day moving average, which is coming in at $299.41. That would be sweet. We'll have to stay tuned next week and see if we can get some good news coming in here to help it do that. But if it cannot, we do have support down here. We have price support down here at 270, 271, right where you see the 50-day moving average coming in. So I suspect that the SPY will find different ranges to trade in, hopefully not too far to the downside, but if it does have to move down a little lower, hopefully it'll find some ranges to trade in And unless we have, excuse me, an exogenous shock come up that nobody can see right now, I don't see it moving all the way back down to where it started on March 23rd. So anyway, from my lips to the trading gods. Now let's go on to our next chart. This is a daily chart of the Invesco QQQ. As you all know, the QQQ represents the ETF that follows the NASDAQ 100, where, of course, all the big mega cap growth stocks reside. Tech stocks have definitely been the leader in this last move up that we have. Now, when I capture this chart today, the QQQ was trading at $221.72. Now, its all-time closing high was on February 19th at $236.98, and now it's made its way back toward that high for sure. It's now only 7% off that all-time high. That's pretty good. Now, today, again, as I said, we're trading at $221.72. The QQQ recently has used the 20-day moving average for support. We had a couple of much more narrow, or I should say much steeper trends here. Those trends were unable to keep going, so the trend itself, the uptrend, is still firmly in place. It's just that the angle of the trend, I didn't draw that very straight, did I? The angle of the trend is starting to soften a little bit, as one can imagine. It's fantastic. It's done so well in this environment at all. Now, we have a gap up. We had a gap right in here back in February. The high there was 224. So you can see the QQQ has nicely moved above that 224 and filled part of that gap up to the highs here at 228. So now 228 is our new resistance here, and the gap goes up to about 229 229 to 230. So if it fills that gap, it's got to really move up almost to 230. But we do have support here again at 217. Where the 20-day moving average is. We have more support down here at 211. So there's an uptrend in place very definitely. We just have to watch and see if it starts to soften. We want to make sure to keep our stops in on all of our positions. We don't want to give any of these profits back. Also, do keep an eye on Apple. It's obviously the biggest component of this index, and it does tend to kind of lead the market around, at least to a degree. Our final chart today is the iShares U.S. Construction ETF, symbol ITB. It has 44 holdings. The top components are D.R. Horton, Lennar, NVR Incorporated, Pulte Group, Lowe's, Home Depot, and Sherwin-Williams. Okay, so the ITB made an all-time high this year. It made an all-time high this year at 50.52. Then it dropped like a stone, as you can see here. It dropped really, really hard on the coronavirus news. Dropped to a low of $20.39 on March the 18th, a few days before the SPY made its low. This was a 56% drop here. That's huge. 56% drop on the ITB. Since then, it has rebounded nicely, and you can see it's moved up here in an uptrend, not the world's calmest uptrend, but definitely an uptrend. And this is not actually a terrifically volatile ETF anyway. So if I could draw a straighter line, you could see what's going on here. It moved up, then did pull back this week with the rest of the market, pulled back down here to just below 34. And today, as I captured this chart, the ITB was trading at $36.42. Now, with interest rates so low, I'm going to watch the ITB as we move into next week. Definitely going to watch it. I've kind of been keeping up with some of the real estate, and definitely we're seeing home buying still going on Inventory for residences is very low, but there are definitely buyers in the market. And with interest rates so low, that is a possibility of keeping some of this buying up. We'll have to see. So if the ITB remains positive going into the coming week, as you can see here again, it's trading right now at $36.42. If it can continue in this move, you can also see it's using the 20-day moving average, the red line, as its support line here. So if it remains positive in the coming week, I may buy small share size of the ITB. I will put in an initial stop down here at $33. Now, if and when the ITB, the next resistance line here is 38. If it can move up and above 39 is what I meant to say. If it can move up and above 39, I may add to the position. Now, it may be a zigzag route that it takes to get there, but if it can move up over 39, I may add to my position. I will be keeping an eye on the 200-day moving average, which is right now trading at $41.44. We'd get a nice little profit if we get in here by 36 and change. And then if it moves up to 41 and change, the 200-day moving average is moving horizontal there. If it continues to move horizontally, it shouldn't apply as much pressure, act as quite so much resistance, but of course we don't know. We'll have to wait and see. So if it starts up and moves over 38, over 39, may add small. We'll also, of course, tighten the stop up and turn it into a trailing stop. So then we'll have to deal with the 200-day moving average again. When and if it gets there, if it's strong and pops through it, great. If it has to dawdle, maybe we take some profits off the table. Also, of course, please know if the market for some reason makes a big U-turn and rolls to the downside, I may exit this trade early before it reaches my stop. So anyway, keep an eye. You may want to keep an eye on the ITB in the coming week. And now, please know that I've temporarily suspended my usual list of next week economic reports. Okay, so let's talk about this. And I know a lot of people, a lot of traders go, oh, checklists are big yawns, but you know what? They really help you make money. So let's talk about this. The question this week is, do I use a checklist to plan my trades? Do I use a checklist to plan my trades? Now, please know, all of us need a methodology for entering trades that serves our trading style. My style may be different than yours, and yours may be different than other people you know. But we all need a guide or an overview or something we do each and every time that makes sure that we approach the market in the most profitable way we can. Now, as you all know, a checklist is a straightforward document. It could be a spreadsheet, it could be a Word document, doesn't matter. It is a straightforward document that assures you check off each point that you need to make sure that every exact thing you have done properly. It keeps us honest, people. It keeps us honest. Think of your checklist as a rational decision-making tool, and that's really what it is. And it guides you through every trade. Now, the advantages of a checklist are numerous. It will guide you through the necessary pre-entry steps, just like when we were talking about the ITB, and we say, okay, we can see where it was, and we can see it bounced off those lows, and now we see it's moved over 36, and we see it's above the 20-day moving average. So maybe it's a good entry, depending on what happens, excuse me, in the coming week. And so we put that the ideal entry point would be right around 36.50, 36.70. We know that we're putting in our stops, so we have our entry price. We know our risk management involves starting with an initial stop at $33 or higher or lower, depending on where you want to put it for your trading style. But we have these numbers, and then we look to see where our our possible profit potential might be. So we've got it organized. We know what we're going to do. We know if it goes higher, we're going to then move up a stop to our trail, move it up to a trailing stop, and we'll put down on our checklist what that will be, whether it's a percentage of the movement or whether it's a dollar amount. We'll put on there what we're going to do to manage the risk. Maybe it's just a price or a couple of words. That's fine. But it's a checklist, and it keeps us honest. And again, it frees us up mentally to focus on the specifics of the entry, the risk reward, and the profit potential. Now look, guys, in the stressed, hectic environment of the volatile market we're in now, a checklist forces us to focus. It forces us to act in a disciplined and methodical way. And it should, once it's done, give you a reliable plan. And a lot of these numbers you're going to put in before you actually get in the trade. And also, if the trade you are planning is not right because the numbers don't match up, the stop is too close or it's too far away, or you're not able to put it in a logical place that makes sense, maybe you want to even postpone that trade before you ever get into it, or totally rethink it. And that's what your checklist will show you. So please consider design a checklist for every part of your trading day. It could be a pre-market checklist. It could be and it should be a trading plan for each trade. Again, it could be a spreadsheet in that form, or any form you want to make it. Just make sure you have a place that holds you to doing what you say you're going to do. Please know that checklists save you from stress because you've got it organized. Saves you time because you don't have to go, now what did I do? What was I thinking? And it saves you money because you don't get the surprises that you get if you just have no idea where you got in or where your stop is or where your profit target might be. It saves you a lot. So please consider using checklists. They will help to increase your profits. And now, one more thing. For a few more days only, we are offering a 20% discount on all of my training programs. And we've had this going on now for a while during the coronavirus pandemic. We've never done this before, but we are offering 20% off on each and every one of my training programs. This sale will be over, I should say, in just a few more days. So if you want to check it out, go to the link below, or go ahead and just click on the button below. That will accomplish the same thing. So everybody, please stay safe out there, stay healthy, keep green on your screen. I'm Toni Turner, and this is The Market Now.